You mentioned like your 60/40 operates more like an 80/20. Can you kind of dig in and kind of explain, again, to someone who's not familiar with your models, like how you guys do that?
Yeah, for sure. And what I mentioned, we keep risk very similar. Um, there's two main differences with a diversifier and a hedge. So a diversifier, when you're thinking about cash, bonds, commodities, whatever it may be, there's a chance that it really helps when equities sell off, and it sometimes can go up as equities go up. With a hedge, it's a negative carry vehicle, which probably doesn't mean a lot to many people, but basically it's a negative return mechanism unless there is a market sell-off. The biggest difference is you have a known quantity when markets sell off. With a hedge. With a diversifier, it may or may not work. So when we're constructing portfolios, we use explicit hedges on the S&P 500 within the portfolio in order for us to over allocate to stocks.
All right, that's very interesting. It's the first time I've heard it described that way: a hedge versus a diversifier. Um, that's interesting. Thank you. And I'm going to try to steal that from you when I'm talking about the Aptus models to advisors. And then one thing we like to hit hard with you guys is like your service. Again, when I came on board, it was like great products and like kind of killer, and it's almost getting cliched at this point, but killer white glove service. Do you mind touch on that a bit more?
For sure. So the portfolios have to be solid and the performance has to be good without question. Like that's the starting place. But if we're just putting portfolios on a shelf, there's a lot of investment work that still has to be done to implement. And going back to just a quick snapshot of Aptus, we were founded in 2020 or 2013, and we launched with a couple of strategies and tried to do the traditional asset manager type of growth strategy. And what we found is advisors needed a lot of stuff outside of just one strategy. So tax transitions, casework as far as like comparisons, building out high net worth proposals that are white labeled to the advisor. Those are all things that we help with, and what we've done since the birth of our services, what we call our shared CIO support. And what we've tried to do, because this is typically we're servicing 500 million plus type of RAs directly for this shared CIO support. What we've tried to do, and I think we've done a decent job, is replicate what we're doing from a service perspective with these larger RAs, and replicate it for each branch office within Silver Oak, in addition to the portfolios.
James, any final thoughts before we close up shop?
Yeah, the only thing I'll mention, given that we're not a giant firm, but we still have 12 CFAs, 40 people on staff, I think it helps us be a little bit more accessible and strategic in how we work with advisors. So I just think that's worth noting. And, all the groups that we work with appreciate the partnership and looking forward to meeting all the new advisors that are coming on to Silver Oak.